All right, and welcome back for the episode of Carnivore Trades. Today is Friday, March 10th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, pretty good sell-off here today. So, Friday Bloodbath. Spiders down 1.4, as are the triple Qs, Dow down 1. And the Russell getting hit pretty hard today via the IWM down 3% here. Big sell-off there on the Russell going all the way back down to that 175 area. I was looking for 180, and we got all the way to 175. So big move. Take a look at the volume there. 66 million on the Russell. That is huge. Spiders volume here, very high as well. Over 160, almost 170 million shares here. Markets have just closed a couple minutes ago. So big time volume here. Let's look at the VIX, up to almost all the way to 29 there. So that is 28.97 there. Big surge. Obviously came off the highs here. And markets basically closed at the lows of the day, outside of a little bit of a kind of day traders covering shorts here at the end of the day there. Important things happened today. Multiple things. Two of them. Russell 2000. I mean, it's just kind of needless to say at this point, but we did clear. Let's forget. We don't even care about this anymore. We cleared that yesterday. We talked about this level. So that's a failed inside bar pattern. Look at this. Look at this naked chart here of the Russell. That's a power sell on the weekly time frame, and the triple Qs here. More importantly to me here, that's a failed inside bar. We've been watching that for 3 weeks now, and that has failed. What does that mean? It just means the next rally here is likely to result in a lower high. We are in sell the rip mode. We talked about this a few weeks ago, and the spiders gave us clues, and this is why I said the next rally will be a sell the rip. We closed below that green bar a few weeks ago, the week of the 20th. We got a rally. It ended up being a fake out. So that is really just the long and short of it there. Head and shoulders now confirmed in play. And that should take you down to about, let's see, that's like about 30 points or so. That should take you all the way down here into the 363 area. So right down to this pivot. Let's draw it in there. And we'll just copy this. So there you go. There's your target. Now, it's not going to go down in a straight line here. There will be bounces. My guess is Monday we gap down. We test lower prices. We probably finish with like some type of a doji, some type of a pause candle. Tuesday, regardless of what CPI is, we probably bounce. Now, at this point, 25 basis points is the consensus. Yesterday, or you want to say yesterday was 50. Or the day before was it 50? I don't know. It's 25 now. The reason for that is I believe now, and I've been saying the opposite for a while until proven otherwise, but now we have actual evidence that there is, like the recession is starting, and the inflation should come back in, start to come back in more aggressively. So unemployment rate upticked a little bit this morning. The market popped. And then it faded immediately. I mean, it was not even, we rallied for about 10 minutes and then we rolled right over. So what now is happening is, you might be asking, how's this possible? I thought the market wants disinflation. Historically, and we're looking at the yield curve here, so the 2s and 10s getting a nice bid off the lows there. 3-month 10-year actually further inverting. But you see the 2-year coming way off the highs there, the yield. But what's happening is, historically, once the Fed pivots, that's when the bear market really kicks into gear. And one of the things I've been saying since December is just because we break above this trend line, I called for us to break above this trend line. And I said it wouldn't be the end of the bear market. Everybody said, oh, it's over. Just because you break a trend line doesn't mean that, that's it. The lows are in. Like, it's just one level. Okay, so it doesn't mean that, everything, we're out of the woods here. Again, going back to the comparison in 2001, I have to bring this up again. I know I bring it up all the time, but I got to bring it up because I think some people don't really fully grasp this. But you broke this very long trend line that went on for over a year, just like the one that we had. And guess where the Fed pivot was? Right here. So right at this failed bull flag here, which turned into the biggest leg down in the market. What do we have here? Trust the trend line. We go through it. Oh, everybody, cup and handle, all-time highs. It's all over with, cup and handle. Failed bull flag, and now we're making another leg lower. We're back below this trend line. It's well below the 200-day moving average here. We've reclaimed trend to the downside. Basically, everything that, we've been calling for is starting to happen here. Now, again, there will be bounces here. There will be opportunities to play this on the long side. This is why I like swing trading, because I don't have to be bullish or bearish. Right now, I'm still bearish. Market is a little bit short-term oversold, though. Heavy volume there. And then when you see a volatility spike like the one we got, you got to expect some of that's going to come in a little bit here. But market, I think, we have OPEX next week as well. We'll probably be a little bit more neutral. But this is all about pattern now. If we stay below this 395 area, 393, 395 area, it's going to be really hard for the bulls to move forward. So they really need to V-shape next week, and I don't think that they will. I think we have another push down, and we'll get a nice, I would say, a long opportunity. But right now, bears have reaffirmed control, and we now have trends. We talked about this yesterday as well. This has been a tough market to trade. It's been tumultuous the last 4 months. Just chop, 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 chop. We got the moving averages starting to tighten, and now we should get an expansion. So I think this will get a lot easier here. But yeah, a pretty big win for the bears. We had a rally up intraday. They slammed it back down, and they pushed it below that critical level that we've been talking about on the Qs by the end of the day. So really making a statement here. Again, looking at the triple Qs. This is still holding up okay. They did lose the 50 and 200 moving average on a weekly close. And it looks like, see, this is the thing with the Qs too. The Qs are still outperforming a little bit. And I think a lot of the downside in some of these tech names was priced in last year. And you can see here, we didn't close below last week's low. We did, fail that inside bar, but we just barely closed above last week's low. So the Q's still outperforming, whereas the S&P, and then we look at the Dow, big outside candle on the Dow there, and then obviously the Russell, which we talked about, just a monumental collapse. Again, everybody knows about the banks, SIVB. I think that was halted all day long. I believe FRC was another one. By the way, these were all recommended by Kramer. That was good stuff. Go check that out on FinTwit. The video's all over there. I think I tweeted it out, but basically, this yield curve inversion, if you've been wondering why I keep saying, or have kept saying for months, why I'm like, guys, the banks are going to be in trouble in 2023, it's because of that yield curve. They borrow at the short end and they lend at the long end, and eventually it's going to hit these guys' balance sheets. We're starting to see that now. Obviously, SVB under a lot of trouble here. The XLF down another 1.82% here today. It did come off the lows. It hit that target in just really 3 days. So we talked about the head and shoulders target on this. I said it should get down to 32 and change. That's where we got today. We came off the lows. So that may get a bounce here, but this is a bounce for selling. These still have lower to go. KRE, again, came way off the lows. This still has lower to go. Monumental sell-off there. Look at that. Big bear base, and then a slice right through that area. There is a pivot right around here, 46. That should be very good support if we get down there. I don't think it goes in a straight line. There will be bounces, just like everything else is. But, just laying out the scenarios here for you. Anyways, we talked about the indices. Let's talk about the semis. So semis coming under pressure with everything else down 1.65. Still holding up better. Still above that 50 moving average. We'll watch that going into next week. Let's look at everybody's favorite stock, NVIDIA. So down 2% here on the day. Basically saved that rising wedge for the most part here. You save the 20 moving average. We'll watch this one for pattern next week. My guess is, I would say possibly next week or after OPEX, that's when this wants to come in. So they may hold this up into OPEX for whatever reason, depending on the market makers, how they're hedged, how they're positioned. But this is obviously high on the hog. Everybody knows it. This range is tightening like crazy. Could it get up to 250? It's possible. I mean, I can't rule it out. It's a strong name. The trend is up, but this range is tightening, and it's on borrowed time. But I just wanted to cover that, as well as AMD here. That one got rejected pretty nicely yesterday and came in. So I think these semis have topped. Again, they're not going to go down in a straight line. We'll watch them for pattern. But again, lots of weakness out there right now. And here's the IGV here, cloud software down 2.71. That has finally closed below that green bar low. So that's a weekly failure, and back below the 50-week moving average. again, these aren't going to go down in straight line. You do have the 100 kind of upsloping right there. There's a little bit of support in this area around 268, 270. But you slice below that 200 and 50 MA and close below both of them on volume. So again, weakness in cloud. Oracle, that's not a good look here for Oracle. This was a bullish base up here. They had earnings yesterday, and that got sliced pretty good. So that failed as well. So a lot of weakness out here, as you can plainly see. Dow Transport's 2.5% cut, closing below this green bar. It saved the 100 MA by the end of the day, and they did save this big power bar. Once this goes, the transports are cooked. For now, though, they're just under pressure. Again, just like everything else. Again, Bondland, 2-year, we looked at that a little bit. Look at the surge. I think it was up like 40 basis points yesterday, up 64 today. So this looks like a bottom, which means the recession has probably started. So that's really what it comes down to. There's the 10-year and there's the 30-year as well. Big move up in ZB, up 281 basis points. Guys, that is historically ridiculous for ZB. Crazy volatility in the bond market. All right, over to housing, XHB lower, ITB lower. Again, same thing here, both of them losing their 50 moving average. VNQ getting crushed, what I've been talking about for a while. Big fat bear base on the weekly and a nice slice here today. Where did it stall out? Right around 80 and change, so into this pivot low. Again, probably gets a bounce here, but not a strong chart. Anyway, look at it. XLF, we already mentioned. That should get a bounce next week. Broker dealers, take a look at this, guys. Sliced 2 days. That's all it took to get through that big fat rising wedge here on broker dealers. What a move. So that has got some velocity behind it here. Maybe wants to get down to that 50-week MA. There is some support right in here around 450, which is where we stopped today. But this one should put in a lower high as well. What a move there on XPD. 2 days is all it took to get through that trend. I thought we would stall at 480 and then put in a flag and then go down, but that was a pretty good cut there for XPD. All right, over to energy here. So again, relatively quiet considering how equity markets here. Crude just up 1%. It's hanging in there again. We'll watch this. I don't know what's going to happen with it. The recession does look like it's starting, so I guess I'm favoring the downside more. It does look like we're putting in kind of a bear base here, but it's holding up, so we'll just leave it at that. If it loses this pivot, that's when it wants to go down. If you get above this one, then it's the opposite here. XLE, again, wow, looks like we got a close below that 200 moving average there on the daily and below this this white trend line here. So they must have just, looks like, yeah, they just flushed it in the last half hour or so. It did hold the 50-week moving average. Again, we'll give it the benefit of the doubt here, but if this has continued downside next week, it's going to go to that blue trend line. Again, I've been looking for it to go to that for a while, so wouldn't surprise me at all. XOP closing below this white trend line now, so that looks to be in corrective mode here. So this can go lower, probably into the 117 area. That's going to be decent support here on the daily time frame. OIH, that's a failure. So that a big outside candle kind of looks like Oracle did on that weekly. And they were unable to save 308.31. We can get rid of that. That has failed. Engulfing reversal cutting through the 20. So this should get down to that 280 area probably sooner rather than later. Again, it might stall out a little bit next week. We have OPEX, so can't rule it out. But pretty good reversal there and pretty good cut on OIH. Nat gas lower as well. This one has one more little dip, and then it will be time to take off once more. Nothing really too new to add to it, though. Again, could get down to that gap fill there. Can't rule that out. Dollar index was lower earlier. Little test candle here on the daily, and we closed back inside of the green bar and the 20 moving average. So nothing really broken about the pattern. Just a lot of people are asking, how can the dollar be down today? It's just because of bonds. So that's just really the end of it. Now, if we keep selling and we really start to sell, the dollar will surge with bonds. But right now, it's still kind of an interest rate play. So that's why you're seeing the dollar up or dollar down, the last 2 days, even with a weak equity market. But for right now, pattern is still fine here on the DXY, and I do expect it to consolidate a little bit more, and then it will make another advance. Gold having a huge move again, a little bit of a fear trade to an extent here as well, also, which you could imagine because bonds were up as big as they were. But yeah, nice move there for gold, nice outside move right up into the 50 MA. I'm not sure what this wants to do right now. I'm not a buyer of it at all. but it's had a nice move here, so we'll respect it. We'll see what it does next week. Maybe they hit it in OPEX. They usually do that, so something to be on guard for. I'm a little bit more neutral on it at the moment than anything. Silver, again, a nice little bid here, but again, you got to think about recession. So it is up 2%, but still inside of this red bar. So if the market's concerned about a recession, then it's going to price gold differently than silver. And I think that's what we're seeing here today. Either way, silver has one more low to make, and then I will be a buyer myself. Platinum here, hanging in there okay, up 1.34. So still okay on the chart. Again, I'm still looking for one more dip. NPL futures and then copper just kind of stuck inside of this wedge. I think copper wants to break lower, though, in the near term. Maybe it can bid back up to this trend line one more time. Maybe even pierce it a little bit. That would actually possibly be a selling opportunity, but we'll see what it does here next week. Again, we're just watching that tightening range for now. All right, lastly, over to Bitcoin. So all the way down to the 200 moving average. I'm not sure. I believe Bitcoin closes on Saturday for the week. But as of right now, we are below that green bar. So unless they save it, that is a failure on Bitcoin. So I would watch out. I don't like the pattern. I don't like that you had bullish consolidation and then it broke down. It could easily stall out here, go sideways at the 200. But if it does that, it's going to slice through it and get down to 17, 18,000. So I'm not liking the pattern here on Bitcoin at all. Again, probably a little oversold, might need a bounce here. But again, that weekly pattern, that daily pattern, those are failures and we have to respect them. Just like on the spiders, right there. That's why I said, look, sell the rip on the next pop. And everybody turned bullish last Friday. Every single person that had a bear take was getting dunked on. And you see what happened there. So we easily took those lows out. Respect those failed patterns. They tell you a lot. Same thing with the triple Qs. That's why I am so adamant about them. Anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all next week.